The point of it is that all of these countries understand what is happening, and they understand that the suppression of the Western market is that's how they win the game. And they're just saying, flaunting it right in our face, not only by taking delivery, but saying, yeah, we're going to buy, 36,000 ounces a day for the next month. This is what they're doing. They're using the suppression of the Western paper market against us. I've been saying that forever, and they are draining the exchanges.
As Western sanctions intensify against Russia, the country strategically turns to precious metals to circumvent financial restrictions and sustain trade relationships with key international partners. In a significant move, Russia has announced plans to increase its daily purchases of gold to 8.2 billion rubles, marking an extraordinary 601% rise compared to previous levels. This move will see Russia investing 172.9 billion rubles, $1.9 billion, in gold and foreign currency between September 6th and October 4th, 2024. The Russian Finance Ministry has confirmed this unprecedented surge, highlighting that the daily expenditure on gold and foreign currency will reach 8.2 billion rubles. According to the recent RAND Europe report, Gold Rush, How Russia is Using Gold in Wartime, this strategic pivot to gold is Moscow's attempt to counteract economic instability and evade the impacts of sanctions. Historically reliant on oil and gas revenues, Russia has increasingly focused on gold in the lead-up to its full-scale invasion of Ukraine, positioning itself as a major global player in the gold market. The report highlights that Russia is now the world's third-largest gold producer and exerts significant control over key gold assets in Central Asia and Africa. Miles Franklin CEO Andy Schectman asserts that this aggressive gold acquisition strategy aligns with broader market trends, particularly in the silver market. Recent data shows a sharp decline in available silver. From July 31st to August 31st, 2024, the float of silver in London dropped from 336 million ounces to 309 million ounces, a decrease of 27 million ounces or 8.1% in just 1 month. Since November 2020, gold and silver have been significantly withdrawn from the COMEX, with 24,000 tons of gold removed, nearly equivalent to India's total imports over the past 3 years. This trend, Andy suggests, coupled with the use of strategic contracts and delivery mechanisms to shift metals from Western markets to other regions, indicates a concerted effort to exploit and challenge Western market suppression. Before listening to insights from Andy Schectman's interview, hit that subscribe button and turn on the notification bell to stay updated with all our latest content. Thanks for watching and enjoy the video.
36,000 ounces a day at current prices. It's a 600% increase in what they were doing. And when you put that in context to what we are seeing coming off of the exchanges, it's part and parcel with what I've been screaming over and over and over again. Yeah, I say the same stuff. I do. But it keeps happening, and it keeps happening, and it keeps happening. And if you don't pay attention, you miss it. The recent data as of August 31st shows us that when you talk about the amount of silver that's been taken off just the LBMA in the last month from July 31st to August 31st, July 31st, they call it the float in London. There's 800 million ounces of silver in London on the LBMA. 500 million belong to the ETF. So the float, the 300 million, are the ounces that are available to be delivered that back the bars. So when we talk about the float at the last day of July in 2024, that float was 336 million ounces of silver, or 10,440 tons. At the end of August 31st, 1 month later, it's 309 million, or 9,599 tons. In other words, 27 million ounces, or 8.1% of all the silver in the London vaults was drawn down in 1 month, in the month of August. And so when you talk about how fast this is happening, it's ridiculous. And then you look at COMEX, and since November 2020, when I started on talking about this with you, that's about when I started talking about all the deliveries coming off of COMEX that had never happened before. Never. We've seen in gold, 2,136 tons of gold have stood for delivery, and 24,072 tons of silver have stood for delivery. And I remember I said that just in terms of the amount of 336 million ounces is 10,440 tons. Well, since November of 2020, we have seen this massive amount of 24,000 tons taken off. So you're talking, almost what are we talking? 800 million ounces. That's almost the exact amount that India has imported in the last 3 years. And so this is something that should not be overlooked or taken lightly. That doesn't even take into account those numbers off of COMEX, the exchange for physical, which we've talked about, where massive amounts of gold and silver are purchased in the West and delivered in other parts of the world, usually London, but there is that little known contract that was developed in 2015 that allows metal to be delivered to Brinks, Hong Kong, which is a COMEX facility, which then it's usually in the kilo bars, the mini contract on COMEX or the mini kilo bars. Well, that's what's traded on the Shanghai Metals Exchange. So they can buy and stand for delivery on the mini contract and send it to Brinks, Hong Kong, where then who knows where it goes, probably gets trucked over to the Shanghai Exchange, which deals in kilo bars. The point of it is that all of these countries understand what is happening. And they understand that the suppression of the Western market is it's how they win the game. And they're just flaunting it right in our face, not only by taking delivery, but saying, yeah, we're going to buy, 36,000 ounces a day for the next month. This is what they're doing. They're using the suppression of the Western paper market against us. I've been saying that forever, and they are draining the exchanges.
Central bank demand for gold has played a pivotal role in the impressive surge in gold prices this year. And according to recent analyses, this trend is expected to continue. A new report indicates that gold's appeal remains strong, particularly driven by robust purchases from central banks in emerging markets. Central bank buying has significantly contributed to gold's rally, with these purchases representing about 25% of global demand since 2022, more than double the average of around 11% over the previous 5 years. This surge reflects a strategic shift by these banks to diversify away from traditional Western financial systems and to bolster their control over global reserves. Countries like Russia and China have been notably proactive in their gold acquisition strategies. Russia has announced plans to invest 8.2 billion rubles daily in gold and foreign currencies, marking a staggering 601% increase from previous levels. This substantial investment is aimed at boosting reserves and strengthening Russia's position amid Western financial pressures. Similarly, China has been purchasing silver at prices higher than those quoted in Western markets, emphasizing its broader strategy to secure precious metals and reduce reliance on traditional financial centers.
So let me just read this to you. It's about 4 paragraphs. But I want you to keep this in mind as we talk about the potential for them revaluing the price of gold and why all of these countries are massively buying it, okay? So this is 1974. America's objective, the official transcript of the meeting quotes Enders as saying, was to move towards a demonetization of gold to begin to get gold moving out of the system. Kissinger asks, why is it against our interest to have gold in the system? Enders replies, it's against our interest to have gold in the system because for it to remain there, it would result in being revalued periodically. Although we still have substantial gold holdings, a larger part of the official gold in the world is concentrated in Western Europe. Well, now it's concentrated in the East. Anyways, he says this gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. Kissinger says, but that's a balance of payments problem. Here's the cool part. Yes, but it's a question of who has the most leverage internationally, Enders answered. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. All right. So now we talk about gold in the unit and gold being used to back a new system. And who's buying all the gold? Oh, yeah, it's the central banks, more so than in any time in history. And what is gold? We know it's the only other tier 1 reserve asset. And what are they doing? They're all repatriating it and bringing it home. And what's happened in China over the last 6 months? Well, they've pushed silver $4 an ounce higher than it is quoted in the West. So isn't that really the price? So if you are a sophisticated trader or an idiot trader on Goldman Sachs or JP Morgan, well, you got 50 million ounces, you can sell at a $4 premium. You just cleaned house. You just made $200 million. So you're happy about that, but that 50 million ounces, that ain't ever coming back. Never, never, ever. And so the point is that is the price. So when you talk about they knew this in 1974, and gold is held on every central bank balance sheet in the revaluation account. And Enders was telling Kissinger, we can't let them have the gold. They can revalue it. Well, what if that's the ultimate plan of the BRICS nations? What if they're the ones buying all of the gold, not really telling us how much they have been buying? What if Russia's been buying that much under the table for a long time? They're not telling us how much they produce at all, nor is China. The IMF said China has way more gold than they tell us. Your buddy Alistair, who I think is one of the smartest guys in the world, says they have 40,000 metric tons. Not the 2,700 metric tons that they tell us that they have. And the head of the IMF said they got way more. The lead analyst for Bank of Montreal says they have. Well, what if all of these countries ultimately plan to revalue gold, just the way that Senator Loomis talks about? Now you have a dominant position to create a new system or to create reserves. So I think it's very interesting when you see that these countries are accumulating the gold the way that they are. It's no small thing. It shouldn't be underestimated. It shouldn't be dismissed. It's a very big deal, whether it be draining the exchanges or just outright buying, or like we said last week, China going all around the world, according to Sean Kun, the head of Dolly Varden Silver, and buying up all the concentrate and all of the doré bars from the miners, and then sending it home and refining it so the metal doesn't come off of an exchange. It doesn't come off of a platform that allows the price to be affected or the volume to be tracked. This is a high stakes game, and we are losing and they are winning, and they are using our stupidity of suppression of the paper markets to do so. It's a big deal, Dunnigan. It's a really big deal.
These trends show that countries are not merely stockpiling precious metals, but are actively influencing market dynamics and challenging Western financial dominance. The deliberate accumulation of gold and silver, combined with actions such as repatriating reserves and managing supply chains, reflects a strategic effort to reshape the global financial system and establish new reserve standards. Share your thoughts on Andy's prediction in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.